Welcome to today's Canary report. Markets are cautiously optimistic as investors digest fresh geopolitical signals alongside solid earnings momentum. With all major indices climbing and volatility cooling off, we're seeing a classic risk-on rotation after the mid-week tech sector chop. Let's see what our canaries are telling us about where capital is flowing next. Spec leaders show a healthy split between cautious optimism and selective aggression. SPHB jumped 1.18% on strong speculative inflows as investors repositioned into high beta tech names, while XBI's 0.67% gain reflects biotech rotation following positive regulatory whispers. The mixed performance among ARKK04 and MAG0, 44 mils suggests institutional investors are still calibrating their exposure after the Fed's midweek commentary on rate-sensitive sectors. Overall, greed is present, but not reckless. Speculators are positioning for sustained upside rather than chasing momentum blindly. Credit remains remarkably stable with minimal stress signals across the yield curve. High 0.14 and HYG 0.19s both posted small gains, while HYGW stayed essentially flat at 0.03%. This muted reaction indicates lenders see no immediate deterioration in borrower quality despite geopolitical headlines. The 10Y Treasury's modest rise to 4.49% suggests bondholders are pricing in a slight rate bump without panic, likely influenced by the dollar's stability at 99.81 and limited inflation surprises. Credit is breathing easy today. No rotation into high-yield bonds for safety needed yet. Volatility has cooled sharply across all fear instruments, with UVXY 5.65, VIXY 416, and VXX 389 all retreating meaningfully from their peaks. The 9% plus drop in the VIX to 17.68 points directly to reduced uncertainty around geopolitical flashpoints, specifically those US Iran peace signals that dominated headlines today. Fear isn't dormant, it's being actively managed, as investors process the potential for de-escalation, rather than assuming worst-case scenarios. The compression across all three volatility products confirms this is a broad-based sentiment shift, not isolated to one sector. The engine is humming louder than most expected given recent Fed commentary. SMH's 1.09% gain reflects semiconductor demand staying robust, despite the midweek tech sell-off, while KRE's impressive 1.27% move shows small-cap industrials responding strongly to manufacturing order data that came through yesterday morning. IWM 0.57 and RSP 0.31 males both posted solid advances as domestic production indices softened their earlier losses. What's interesting is how evenly distributed the gains are, from aerospace, IYT plus 0, 42 whirls to industrial materials, suggesting real activity isn't just a tech phenomenon, but spans traditional heavy industry sectors too. Safety assets are quietly rotating back into risk, though not aggressively. Bond 0.14, GLD 0.21, and TLT 0.12. All declined slightly as investors trimmed defensive positions, while XLP's 0.88% gain shows food and staples still holding some appeal for conservative portfolios. This pattern mirrors last month's soft landing rotation, where safety was sold after confirming no recession trajectory. The dollar's stability at 99.81 provided the backdrop. Investors felt safe enough to exit hedges once geopolitical risks appeared manageable. Flight to quality is over. Flight to growth is underway. Today's market action tells a coherent story. Geopolitical de-escalation expectations are fueling broad-based risk appetite, while solid real economy data validates that growth isn't confined to big tech. The compression in VIX alongside steady credit spreads suggests investors have priced in stability rather than expecting another crisis. Speculators are positioning for continuation with measured aggression. SPHB's surge combined with XBI's bounce indicates smart money is re-entering after the midweek pullback. The Fed's recent commentary on rate-sensitive sectors appears to be settling into a neutral backdrop rather than creating additional uncertainty, allowing markets to focus on fundamentals instead of policy whiplash. That's your Canary report for today. Volatility compression and geopolitical clarity are creating conditions where risk assets can outperform without fear being the dominant driver. Exactly what we've been waiting for after months of defensive positioning. Stay alert for any shifts in the US-Iran developments. But the technicals suggest momentum has legs if fundamentals hold steady. See you tomorrow with more analysis.